Good evening, this is Nick Inman from VolumeProfileTrader.com on Monday, May 7th, and the S&P, if you're aware, the futures got as low as, I think 13, let's see, 13, no that's not right, 1342.50, sorry, and what's interesting is, if I really zoom in here, the point of control for the year is from 1337 up to 1342.50. So we bounced off of that level today, and rather convincingly, 24 S&P points higher. And what that tells me is at least you can define your risk to the downside. Not only do you have a very nice price action in the market, but you're going off a major level of support, and that is a great reference point. So what you want to do with that information is go through the list, and we'll just look at the Dow, which had a pretty good day in the middle of its range, so theoretically this would be a higher low here, and the NASDAQ, which had a nice bounce today, really the reference point that I'm looking at, and I think I said it in last night's video, 25.75, something like that, 25.70. That's the level that you would look for some type of support. We got as low as 25.86, so not too far off those levels, but we get a bounce, and the point is, you want to stick with what's working, and if it's working, you probably want to have some exposure to it. So let's go through the ETFs and kind of figure out what we want to be long and what we don't. Okay, remember the S&P made lower lows today. The XLF did not. In fact, we are very close. This 15 level down to 1470 or so is a very important level for the XLF, and as long as we stay above it, as long as really we don't pierce today's lows, I think the XLF is something that you can look at. Now, full disclosure, I'm staying overly cautious. I don't have many positions on that are high beta. I did put on a few option positions today, and I'll go through those, but really I'm not very interested in having a lot of exposure to the market. So XLF looks pretty good. XLE made a new low today, and it's been breaking down since February. It's been rolling over, but as we get lower, we get down towards this value area low, where I'm sure there are buyers that are willing to step in what they perceive as cheap energy stocks. So we'll have to see. Maybe this is our bounce, but for now, I would stay away from energy in general. Industrials is another name I'd stay away from. Falling away from its point of control for the year, rather a weak day. This doesn't look like something you want to own. Just to point them out because they are probably the most popular. You can see a name like CAT is rolling over. Similarly, Deere, stronger than CAT, but definitely off its 2012 highs. If I had to pick one of the two, I'd say Deere just because it's remaining strong relative to CAT, but this isn't the time to be buying these, and that's the most important thing to be aware of. XLK looks like the NASDAQ, so this is something I'd rather stay away from too, technology in general. The idea is you do want to stick with the stronger sectors. Consumer staples, it's a boring ride, but they're working for right now, and I think that's worth noting. Stick with the names that look like they have the most promise, and at least that pay a solid dividend. Maybe you could do, covered call strategy, something like that. But really, it's hard to, technically, this is somewhere you want to be. Another name, relatively weak today, but I would look to be a buyer, on a major dip, and major dip would be, if we got down to basically 2012 near the highs of that, or I'm sorry, somewhere an extreme pullback would be like the 40 to 42 range. Um, but right here, right now, you look at it on a volume perspective, and you can see we have a lot of volume from 44.25 up to 45 or so. The point of control would be this 40-40-75 area or so. Right now, you can see we're bouncing off of that level. We'll see if it holds. This could be a blow off top or something. But if you are long consumer discretionary names and they're working, then you can stay long them and just realize that you're holding the best in breed in terms of sectors. Now, utilities, they're a slow mover, obviously, but they're not going to break down like the rest, and you can find those 5% dividend payers collect about 1% by selling covered calls. So you could collect up to 17 to 20% annualized if you are confident in your strategy. It's a really good strategy, and it's something that I think every portfolio needs some of, and consider it like a money market account. Okay. Materials. Materials looks like they're rolling over. So something I'd rather stay away from. So just to be aware of that. So really, what we're getting to, I'll do metals and mining too, which just continues to roll over. You really, as this looks like a tradable bounce in the S&Ps, the overall market appears to be weak. And you want to stick with what's working, but you want to be opportunistic, which means having enough cash to where you're not holding a bunch of losers basically when the market's coming down. You want to be in a position to buy names on the cheap when they get down to appropriate levels where you can define your risk and enjoy a nice appreciation. All right. So let's look at the euro. The euro had a nice bounce today, but I'm still comfortable in saying I think it's right to be short the euro. With that said, we have got a nice bounce off relative to where the euro's been. Has a right to be a buyer or seller at these levels, and you have to say a buyer. Even though my bias is to the downside, as a trader and a risk manager, I have to be careful of that, and I don't want to be stuck in a short covering rally at these lows. And right now it looks like we have potentially the start of one, and I want to be careful. I want to make sure, if anything, on this euro trade that I have on, my stop's at break even, so I'm not losing any money. Alright, just like the euro had a huge rally today off of the lows, the dollar had a big sell-off off of the lows. Or, I'm sorry, off of the highs. And I think that matters because it gives us a reference point. This gap that we've experienced over last night in the futures, it kind of gives you a point of reference in the market, in my opinion, on trying to price things in. And so far, the euro, the equities markets are telling us these current prices, the prices that were traded at last night, were too low, and there were opportunities, or it was time to get out of short positions, or whatever the case may be, that sparked the market to basically reverse and close the gaps from today, at least in the S&P. But then again, you look at something like gold. It looks like it's about to break out the bottom, but at the same time, I really don't count this out from going higher. So it's hard to say. If the dollar continues its path lower, and this was just another lower high, then you have to look at the possibility of equities turning around. So then you would start to look at like an XLE, which got beat down. And a position that I put on, which unfortunately this chart is wrong, so let me get a chart that's right. Okay, ConocoPhillips. What we had today was a name that has bounced at these lows before, and that's what we saw today. It was this down as far as 2% or so. I bought it when it was. I bought the 52 half calls. Expires in June, and I'm just looking for upside. I'm looking for a pop. What I'm really looking to do is sell the 55 calls against it, and try to rack in some gains here. But so far that position is up. I'd say 20% or so. So it's just rallied a bit, about 1%, and I'm already experiencing pretty nice gains. What I can do with that is lower my risk. Instead of taking, a 50% potential loss on this trade, I can move it to about 25, maybe even closer to break even if it continues to move higher. So really, that's it. I think some names that you can continue to be long. ConocoPhillips, Procter and Gamble. I think it gave you another opportunity today. Let's see if I can get the right name. Pepsi. It's working on trying to break out still. Just to show you Coke. That's often in the stratosphere for Coke. Which I covered it back when it was in the 71s. It was a recommendation, and I clearly wasn't involved enough on this one, but yeah, that ended up working. Let's see. Another name I'm looking at is Merck. Right now, it looks like we have a potential fake out, a double top here, but I'm looking for this to at least a point of reference at this 38.40 level or so, and something that you can be a part of. J&J, it's failing right now against its point of control, so keep an eye on this. We caught this from the bottoms here around 63, but these are just slow movers, and that's because I think these are the names appropriate for the market over the next at least a couple of weeks. So really, unless you're playing the S&Ps or names that are working, I don't think much else is worth being long in this market, and that's just something to be aware of. So anyways, take care, have a good night, hope you enjoy this.